Hi friends, welcome to Life and Wealth. Today, in order to give awareness on the tax savings, I am giving my last dose for the financial year ending 2019 and 20 for tax saving. So it's already the 11th month of the financial year, and hopefully the salary for this month could have been already prepared. And if somebody has not saved the maximum amount possible under the Income Tax Act for reducing their tax liability, they still have the time and they can do it now. Let it be late than never. If you can hit the target with the last bullet, that gives a special kick which you can enjoy. Now, before proceeding to advise you what savings you can do for the tax purpose, let me give you a brief checklist so that you are not missing out anything before the end of the year. Now let's proceed one by one. The first thing is on your salary income. You should have declared your house rent receipt and you should have declared your travel cost, that is the cost of tickets, if you have availed leave travel concession. Now going to the house property, you should have declared your rental income, declared your property tax paid, and most importantly the interest on the housing loan if you have taken. The next thing is capital gains. While it may be difficult to calculate your capital gains, if there is a ready-made information, you can still declare this income to your employer so that this is considered while deducting your tax. The next one is other sources, income from other sources. Mainly here interest on your bank fixed deposits will be available. So declaring this is very important, because if somebody is having high amount of interest income, it saves them from advance tax payment. Otherwise, if somebody feels that they can include the income at the time of filing of the return, they may have to pay some interest due to non-payment of advance tax. So these are briefly the items that you should have considered on the income part. The next part is the deductions part, mainly section 80. The first thing is section 80C. Here the items relating to the insurance premium, then children education fees, your investment if any in the public provident fund or provident fund, and any tax saving mutual funds, and housing loan principal repayment. So these are the important things. And apart from this, if you have invested in the national pension scheme, so this gives you additional 50,000 rupees deduction. Now in addition to section 80C, you have deductions available under section 80D regarding the Mediclaim insurance premium. Also you can claim deduction for the health check expenses. So this is within the limit of the section 80D. So many people might have spent some amount on this health checking, but they have not declared. So please do that now. So this is briefly about the deductions part. Now somebody is having some amount remaining which he wants to invest, but where to invest now? So before investing any amount, we should have clarity on when you want the money back. What is the maturity period which the type of investment is having? Now life insurance, which many people may be paying or they may be thinking of paying, but the purpose for which they are putting the money in the life insurance needs to be very clear. Otherwise it is not worthy putting money into the life insurance, which you will have lock-in for say 15 to 20 years, depending on the term that which you are going for. The next options available are the tax saving fixed deposit, so which is having a lock-in period of 5 years. The next one is equity linked savings scheme. So this is the best option which I prefer. I also suggest everybody to go for this because the returns are high and also it is less tax on the exit after 3 years, and the maximum possible return is on this scheme only. So if somebody is very cautious about his savings, then they can put the money in public provident fund. Of course, this is having a maturity period of 15 years. Of course, you can take up to 50% of the money after a certain period of time for some specific purposes. So beyond this, if somebody wants to invest in the national pension scheme having maturity of 60 years, wherein you can get 40% of the amount and balance continues to be invested. Now finally, after having invested, maybe your Form 16 might show some amount of refund, but by the time you file the return and feel that you have filed the return refund amount might have got created in your account, because tax department these days is very fast. So even if one person gets benefited out of this video and got some savings, then my purpose is achieved. So in the next video, I will come up with the details on the national pension scheme, and until then, see you guys. Thanks for watching. Please do like and share it if you have found some benefit on this video. Thank you. See you again.